Hi everyone, this is Paul Fauché, Chief Investment Officer at New Road Capital, just giving you your October market update. So all in all, another really good month for most asset classes. If we go to equities, the local all share up about 1.6% for the month. Developed market equities up about 2% for the month, and then emerging market equities having a really good month at a return of 4.2%. So all in all, really risk on month again, which, if you remember my voice note from last month, we were expecting. We've been quite bullish this year and continue to be very bullish, and the market is definitely agreeing with our thesis. If we look at inflation in the US, sitting at 3%, still slightly elevated, but not anywhere near worry levels. And if you've seen, already started cutting again. The US Fed has already started cutting rates and has cut by 25 basis points recently. So that's obviously also very bullish for your risk assets. If we look at local inflation, so local inflation sitting at about 3.4%, so still on the low end of the target of 3 to 6%, although that is going to be changing going forward with a target of 3%, but still very much in control on the local side. So all in all, on the back of that, the Rand dollar for the month, the Rand was very strong. So it started the month at about 17.65 to the dollar and ended at 17.25. So again, just signs of risk on. Generally you see a strengthening Rand when it's a risk on environment. And then translating into the Orbi, so the local bond market, having a phenomenal month. And we've liked bonds for a long time. Anyone who's been listening to my updates, the All-B South African bonds returned 2.5% for the month. So a phenomenal month there and still looking very attractive. So even though they're rallying very hard, the yields are so high and the real yields are so attractive that we still like them, even though they have been rallying for a few months now. So yield curve still looking very good. And we expect to still get rewarded handsomely for owning those South African bonds. And then the local offshore bond market, down about 0.3 on the developed market bonds, but we actually much prefer the US bonds, which did about plus 1.8% for the month. So US bonds very strong, and we've been owning US bonds for a while as a sort of risk hedge, overlaying to our equity holdings, and that has done phenomenally well during the month. So up about 1.8% for the month, even though its peers down slightly for the month. So all in all, a really good month. Our portfolio has benefited very handsomely over the month. If you see the fact sheets and updated fact sheets, you'll see that the portfolios did phenomenally well during the month. We still remain bullish. We think we're in this environment where you will see rates continue to be cut, specifically in the US. We like the supply side opening of that economy, and we think it's going to be very supportive of just risk assets in general for the foreseeable future. So still very bullish, kind of in line with where we've been for the most of the year so far. So as always, if you need me or the team, please don't hesitate to give us a shout. Otherwise, I will be in contact with you for your November market update in a month's time. All the best. Bye.